Welcome back. Well, as promised, let's get chatting with the management of Indian Overseas Bank. We have with us Mr. Ajay Kumar Srivastava, who's the MD and CEO of the company. Hi, Mr. Srivastava. Good morning, and thanks a lot for joining in. Well, I want to focus first on the deposits. There appears to be a bit of a slowdown out there in the system on the whole. And in fact, deposits in the system are declining. What kind of deposit growth are you looking at?
Yeah, the entire industry is grappling with deposit growth, and the same is true for IOB also. We are looking at around 10 to 11% of deposit growth in this financial year. And if you look at the Q1 figure, we have grown by around 4% in Q1. And yes, please.
Yeah, so 10 to 11% deposit growth in this year when, the deposit growth in the entire system is declining. I just wanted a couple of thoughts. One is that what is your cost of deposits likely to be for you to be able to grow deposits by about 10 to 11%? How much is that likely to increase by? And if that were to increase, what happens to your NIMs?
Yeah, cost of deposit as of today 4.95 for June quarter. We intend to keep it around 5, maybe plus 5 also, around 1 or 2 bips above 5, because that is the situation in which we are in. Having said that, the deposit growth which we are targeting of 10 to 11%, we have a plan already in place. A special retail term deposit of 444 days we started almost 20 months back. We envisaged and we imagined that there is going to be a scarcity of deposit growth. And accordingly, we formulated plans and started implementing it almost 20 months back. And in that 444 days bucket, which we started 20 months back, we have already garnered around 45,000 crores over last 18 months. And in the month of February this year, we increased that rate of interest to 7.30, which happens to be the best in the system. And for 1 year in our recently concluded ALCO, we made it 7.10. So that part is taken care of, that is retail term deposit. And for CASA, if you see, year on year, we have grown by almost 10%. And in Q1 also, we have been able to maintain the amount. Amount-wise, it can be termed as flat, but we have not gone down as compared to the industry. So plans are in place, and for CASA, last year, onboarding of customers was the priority. We onboarded amount around 2.5 million, around 25 lakh.
We get that. We get that you are, putting plans in place to increase your deposit. But the question is, what happens to your margins with increased cost of deposits? 4.95% you said can go upwards to 5%. You're giving interest worth nearly 7% as of February when you restructured that. So what happens to your NIMs? Because in this quarter itself, it saw a big decline both year on year and quarter on quarter. What is the range that one should work with?
Yeah, the decline has been because of one special entry in Q4 of last year. Because of that, the decline is visible. But having said that, the cost of deposit will be compensated by the pricing which we are going to give to our borrowers for further lending. And the days of sub 8 or around 7% lending, that has gone by. We are very, very particular that what pricing we are going to do as far as lending is concerned. So whatever additional cost we are going to incur by increasing deposit rate, we are going to compensate by interest income and other non-interest income also. And accordingly, we are looking at to maintain NIM at around 3.10 for this year.
All right, 3.10. Got that, Mr. Srivastava. A couple of quick questions then. You're saying the deposit will grow by 10 to 11%, but in the first quarter, it's only 4%. You're confident that you can grow at 12%, right? From year on, because that's the asking rate.
Exactly. Anywhere between 10 to 11, yes.
Got it. And you also said that the cost of deposit will go up, but you'll offset that by getting your loans priced at a better rate. So that
increase in CASA.
What is it?
Increase in CASA, low cost.
Increase in CASA, correct. Now, if your yields that you're offering to your customers go up, what kind of loan growth are you looking at? Don't you think it'll be a bit of a dampener as well?
There is huge demand. That is what I can say. Credit demand is there in all sectors, right from retail or MSME or even corporate sector also, demand is there. And there is not enough money in the market. So borrowers are also tuned to this fact that a little bit of higher pricing they have to bear with. That is one part. And accordingly, the credit growth also we are looking at around 10 to 11 and 12% only. This year, the plan of the bank is, of the management is that we will try to grow deposit more than credit growth. That is the plan for this year.
And what's the loan growth target for this year?
Around 12%.
All right,
12%. All right, let's talk about your asset quality then. Could you tell us what kind of recoveries are you factoring in the IBC NCLT cases in FY25?
Yes, recovery, I will take both slippages also. First, I will take 10 seconds about conveying about the slippages. So if you look at Q1 figures, our slippage ratio is only 0.13. We have slipped only 277 crores, and last over 15 to 18 months, the slippage in corporate sector has been nil. Not even a single corporate account has slipped. This shows about the type of credit underwriting we are doing and the level of monitoring efficiency that has come into the system. Last year, for the full year, the slippage was only 1,487. Slippage ratio was 0.87 for last year. This year it is 0.13. That is one part of asset quality. The second part comes of recovery. This quarter we have recovered 582 crores. Going forward, the exact, I will say, amount-wise, that an NCLT and non-NCLT, how much we are going to do, it's difficult at this moment. But having said that, we are targeting 5,500 crores worth of recovery, and one of the great sources of recovery is going to be ARC sale. We are very bullish on that. In the month of April itself, in this financial year, we started ARC sale. 13,000 crores of assets we put on block, and due diligence by many ARCs is going to happen. So we are pretty confident that overall, by the year end, we will be able to recover more than 5,500 crores of bad assets recovery.
All right, that's a tall target, 5,500 crores. And finally, before we let you go, if you could give us a sense of what your credit costs for this year would be, along with GNPA and net non-performing assets?
Credit cost for Q1 was 0.29. We will try to keep it around 0.75 to 0.80, less than 1, of course. And GNPA, we are at 2.90. We intend to bring down by another at least 40 bips in this financial year, maybe around 2.40 to 2.50. Net NPA, we are at 0.51. We are already, I will say that net NPA ratio is one of the best. But still, the year-end budget is around 0.25 to 0.30.
Got it. All right, Mr. Srivastava, always good speaking to you. Thanks a lot for joining in. You've given us a good outlook in terms of your numbers, and we'll hold you to them in your next quarterly update as well. Wishing you a good day and a good quarter ahead. For the time being, the stock holding with a gain of around 1.5%. Well, on that note, we'll wrap up on this edition of Chartbusters. You stay with us, though. Trading Hour comes up next.